What up, trading momentum? This is a video. I haven't done a video in a long time, but it's about time I get back and start doing some of these videos. I did have some option spread videos, but they were kind of old, so I'm gonna record some new ones for y'all. But before I even want to get started, I want to say thank you guys for being a part of the community. We're here to learn from each other. Every day is an educational day. I learn from y'all. Y'all learn from me. We have a very wide variety of people that are really good at their trading strategies. We have spread traders, we have scalpers, we have swingers, and then we have some really good long term traders here. So I mean, I just want to say I can't thank you enough for being a part of this community, and I'm just excited to learn with y'all. I know I talked a lot about spreads. I know I said I was going to do a video for a long time, so finally here's a video why I explain why I prefer spreads over long calls. Now, this is going to be focused around debit spreads. I will do another video focused around credit spreads, but this one I'm gonna focus around debit spreads because it's a much easier concept to understand. Debit spreads is credit spreads is the inverse of debit spreads, but it's a little bit more of a more challenging concept, and the trading style around that is completely different. Low country trader knows it's a long term game, but it's highly probable wins. All right. With that being said, let's get this baby started. All right. So we've got S&P 500 right now, and I'm just doing a quick analysis. As you see, my VIX alerts coming up here saying bull reversals, buy calls. Looks like the market is starting to find a bottom, which makes sense. Here's my gamma levels. I know I share it to y'all in the chat every day on a chart. I also get them on my chart right here. As you see, they're pretty damn accurate. You see right here, that's the S&P 500 came off the 7-day move almost to the penny, closed right below it, and it's been going down ever since. It is heading towards zero gex. Zero gex is where the market makers are full of inventory, and they can start going to the upside. Now, we do want to pay attention to this 1-day standard move and the 7-day move. The 7-day move, which is no surprise, is right at 435. And in my opinion, 435 matches up with the monthly chart, where you can see right here we can hit 435 and still have the overall bullish trend. So don't let this sell off kind of scare you away. 435 is nothing to be shy about. I mean, 35 is actually a really good spot to get calls on. I want to show you one more thing about the GEX levels right here. I can see Amazon selling off really strong right here. Amazon's probably going to head to about 134, 135. That's actually a really good buy area. But enough about that. Let's talk about spreads. All right. Why do I want to trade spreads? Okay, here's an example. If you're not familiar with option strat, I suggest you get option strat. It's very accurate, and it gives you, when the market's open, it gives you live data on how your option contracts will perform. So if you notice here, as you notice right here, these numbers are moving around. That's because it's actually calculating the option prices live right in front of you. So because, as we all know, option contracts are a living entity. All right. So let's just say hypothetically, by the end of the week, we say S&P 500 is going to go to 445, right? So you want to make that trade. So you're like, all right, well, traditionally, most traders will say, all right, I'm going to go buy S&P 500 445 long calls. How much is that going to cost you? Currently, it's going to cost you $115. Your max profit is infinite. Your chance of profit is 23%. That's probably the delta. And then your break even. This is something I really want us to pay attention to. Your break even is 446. Why is it 446? Because you paid a premium on top of the call. So it's going to cost you. So the premium, you need to surpass the premium to break even at expiration. At expiration. It's a little bit different before expiration, but at expiration, if you're going to break even, you need the price to be over 446. Okay. Now, when you're looking at this, you're like, okay, well, I want to go spy 445 long calls, but I want to go long calls because I don't want to cap my winnings because it can go to 500 by the end of the week. Let's be realistic here. All right, S&P 500, chances are it's going to go 445. If S&P 500 goes to like 450, 455 by the end of the week, this market is running extremely hot and is really unexpected. So realistically, let's say the market goes to about four. Let's say you do get your 445, right? then you look at your chart right here. Say, okay, by the end of the week, if this expires at 4:45, you're going to lose about 100% of your profit. If it expires about, let me go ahead and open up this chart some more so I can get some more price ranges here. Okay, so if S&P 500 hits expires at 446. Currently, you do 161% on the 22nd around 3 p.m. So that's what it's looking like right here. All right. So this is something you want to pay attention to when you're looking at your spreads. And you see right now that so you have 445 call. I'm trying to make this a little more wider so I can get 445 in this thing. Okay. There we go. There we go. Yep. So 445, you buy 445 calls, it expires worthless. 446, about four. This chart's moving around a lot on me. About 447, you get 79%. 448, you see where your expirations will be. If it hits $453 by the end of the week, you do 621%. Most of us, we're like, damn, if we do 300%, we're damn good. We're out of the trade because we've already made a lot of profit. But what I want to show you is that the spread. So the spread right now. So if you look at the graph side here, you say it goes up to. You can kind of look at here and kind of do your measurements here and say like, okay, it hits 445. This is where it starts to make money, and you can kind of see where it's 448, and you see your profits here as you move along the graph, right? So that's one of the advantages of having a long call, whereas you don't have a debit spread, because on that side you don't have the sell side, and your profits can be infinity, and you can make as much money as your imagination will allow you, but not what reality will really say. And so also another thing when you're looking at this, you can take a look at the profit, the numbers right here. If you want to see the absolute numbers, you can see like, all right, so if I get 445 long calls, if I'm still at 445 by the close of Thursday, I start losing money just because of time decay. And then by the end of the day, Friday, I will lose all my money because you did not surpass the premium of where you break even. Okay, so that's kind of like what the long calls look like. So what does it look like on a bull call spread? This one is very simple. This one's one of the easier trades. A lot of traders like to do this one. It's like, okay, hey, I believe that that S&P 500 is going to hit 445 before the end of the week. This one with debit spreads, a lot of people don't like them because you cap the amount of profit that you make. But let's take a look at it though, right? If your profit target is 445 and you're trading in a system, as a trader, you should be trading in your system. You should have profit targets and times you're going to exit. Debit spreads makes you follow your system, because if it goes above 445, you're not going to make any more money than what the debit spread will allow you. So it forces you to exit the trade at your trading plan. And that's what you want to do. You want to exit the trade. You want to enter and exit trades according to your plan, and then take your profit and make adjustments later. The trading is not random. Trading is a system. So you want to create your system here. So what's really good about this one? You get the 445, 444, 445 calls. It costs you $33. It's literally almost 3 times less than the long call. So you're risking less money. On top of that, let's say the trade, and on top of that, look at the break-even price, 444. So literally, when the price goes above 444, you're already break even. You don't have to really worry about like, oh man, do I need to worry about the premium capture? Is it going to capture premium? No, because you capture the premium by selling the 445 call. So this is very, very big deal. Debit spreads increases your winning percentages by a small thing of selling alongside. So instead of spending $108 and hoping to get 446, all you need to do is buy 440, sell 445. You still get your chance of profit is 31% compared to the long call, where it's 22%. That's almost 10% more. On top of that, your max profit is more than double, about 100%, almost 100% or 200% here, where your max profit is infinite, uncapped. But come on, let's be realistic. His S&P 500 is not hitting 550 before the end of the week. And plus, you already set your price target. You say it's going to 445. You have no business in being in the trade past 445 anyway. That's not anything above that. It's not according to your plan. Trade your plan, trade your system. That's how you're a successful trader. All right. So with that being said, 445 is your target. So what does it look like here? All right, so if it hits so right now you're the price is at 441. If it gets to close to 440, if it hits 448, 444 today, you make 48%. And look at this decay. The decay, if it hits 44 anytime between all the way to Thursday, you don't start losing money. The price must have been changing, but you don't start losing. Oh yeah, I lost it. Hold on, let me bring it back up. You don't start losing money till Friday. If it hits 444, you're around 42% in profit all the way up into Friday. So it gives you a lot of time to make a decision of do you want to be in the trade anymore or do you not want to be in the trade anymore. And on top of that, if it goes anywhere to 445 and above, you still get your 203% return. That's plenty, guys. And you're only risking $33 for this. And your break even is at 444 is even better. And your chance of profit is 31%. Now look at this. We can even go all the way straight to about at the money 441. And then we can say, you know what, by let's say after OPEX, whatever we say is going to go to 443. So it's going to be a little more expensive because you're buying at the money and the probability is much higher. But look at these returns. You're basically already making money right at uh, 440. Well, let me see if I can open this up a little more. 441. Let me just bring this down. So all you need to do is hit 441. Just bring it down to 440. And you're already basically in the money, making money. I can't open this wide enough. Here you go. 441, we're at the marks above 441, so you're at 442. You're already hitting 8%. You can hold, if we're at 442, you kind of hold that 10%, 11% return all the way up until Friday, as long as we're above that number. It gives you plenty of time to make a decision of do you want to be in that position or not. That's one of the powers of the debit spread. Also on top of that, it costs a little bit more because you're in the money, but you kind of play with them. So for me, with debit spreads, I typically have my price targets, which is 445, and I like to place them around my price target, right? And that's where I can trade very cheap. I don't have to risk too much my account. I can buy contracts in size. I can buy 10, 20, 30 and still not really hurt my account and still have the advantage of having really good profit returns and have a lot of time to make a decision on whether I want to be in the trade or not. Now that's your bull call spread. Let's look at your broken wing butterfly. This one I'm going to show you in the graph. The broken wing butterfly setup is a little bit different, all right? So your bull call spread, the graph sets up like this. You buy, you start making money right around here, right around 444, and then you hit 445, and here's your max profit. Your broken wing butterfly, this is where you buy 444, sell two contracts at 446, and you buy another contract at 447. Now you can adjust this any way that you want. If you want to adjust it in any way that you want, just chat with me. We can talk about it later. But this is just one of the adjustments I have set up. But so this is your bull call spread. What happens is you hit your peak right here, and then if it happens to go above 447 or it gaps up above 447, you still can have 170% profit. If you exit at the peak, you get about 500% profit, right, at this trade. Now, why do I love this trade so much? Because this is your bull call spread. You're trading. You have your probability is about the same as a bull debit spread. Your bull debit spread is max loss is $31. Your max loss here is $34. But your profit potential at the end of the day is about 186%. And on your bull call spread, you're seeing about 233% on this side. So it's a little more of a conservative play, but it gives you more time in the trade. As you see right here, if you start hitting 444, and the minute you hit 444, you're doing 60% on this trade already, right off the bat. And you can hold these gains all the way up until like midday Friday. And then kind of like the last day of Friday is when you start to lose money on this trade. But the thing about it is, so this is a really beautiful trade right here. And if you kind of look at the profit matrix, you can see like, okay, if it goes to 444, 76%, let's say maybe say it hits about 445, you're doing already 100% on your trade. It's a really, really beautiful trade. Your max profit right now is about 170%. This hasn't updated, but your break even is not that far. Why? Because you're collecting premium on the trade, so you don't. So your probability and your worry of, oh, do I need it to hit a certain number is less, because you know that you already collected the premium, and if the price moves in your direction, you immediately start making profit, right? And especially over time, and you don't lose it as much because you're collecting premium. You have premium collected on your side. If you notice right here on the long side, you start decaying really, really fast. You start decaying all the way up on Thursdays when you really start taking a hit on a lot of your plays. If you look at these spreads, you don't really start taking hits till Friday. You don't really start taking hits till Friday if it's out of the money. And the same thing here for this broken wing, for this long call butterfly. Um, oh, I'm sorry, guys. Oh no, this is a, what did I set this up as? Oh yeah, so this is okay. So this is set up right. $2, $3 down, $2 up. Yep. So this set, it says long call butterfly, but it's a broken wing butterfly because of the way the graph looks like. That's your broken wing butterfly. So this one's something to really pay attention to. This is why I really like this one. Your break even is really good, and then your max loss is very, very small compared to the profits that you make. And then you can, depending on how you set the trade, it can be high probability wins. Now, this one is your long call butterfly. This trade is really, really good. It's extremely cheap, but it takes time for you to get the results. But if these results hit, it's amazing. Okay, what if I told you, hey, you spend $50, and I tell you, and spend $50, and if S&P 500 lands on 446 by Friday, you make 500% return. You'd be like, fuck yeah, I'll take that deal. I'll definitely take that deal. And the thing is, that's why these are really good, because you buy 443 call, sell 446, and buy 449. And this is what it looks like on the graph. This is your butterfly. This is why they call it a butterfly. You have your two wings right here. You need it to hit right here in the middle, smack dab. Now, what's the difference between this butterfly and the long call butterflies? You can start losing money if it goes above your trade. If it goes above actually, if this one starts hitting above 448 at expiration, you start losing money. If it goes below 443 by expiration, you start losing money. But so you want it to land somewhere in between 443 and 448 before expiration to get max profit. And even if it goes a little bit over, you still get 380% on this side. If it goes a little bit below, you still get 340% on this side. These are really good trades to be in, especially for the week. As you see right here, their profit, the way they make profit, it's a very small window. Let me open this up right here. So here's a window of profit. As you see, over time, the profit comes slow. So the first day will be about 20%. The next day, you can see it kind of doubles over each day. 20% here. The next day, 40%, and the next day, 94%. And then after that, Fridays when you really start seeing your profits at 265% if it's landing in between these wings. Now, the thing is, guys, we know these aren't really hard guesses, right? Why? Because we have an idea of where the market's going to go, right? We call it every day. Plenty of us call it every day. I say, hey, the market's going to hit about 440. The market has a magnet towards 440, and where are we going? We're at 440 right now. So you don't even have to hold it for the entire day. If you would have gotten to this yesterday, you would have been up 50% on your trade on the butterfly for something that you pay like $50 for, or even less. And the thing about the trading the S&P 500 is you get daily trades on this, so you can do these trades daily. For you can also plan these trades differently for Apple. Or for where they're weekly trades. But this is kind of like my example of these spreads. The main thing I want to share with you guys is that your break evens are much smaller than what your break evens would be on a long call. You see, you're buying premium, and that's it. And then you have to hope that at some point in time it hits that price and hits 446. These other debit spreads is you make money immediately when you hit your target, sometimes even before, depending on the volatility of the market. And this one too as well. Same thing happens here at 443. That you notice on the buy side at 443, you start breaking even right when it hits your spot. Same thing here for the butterflies right here. Hits 443, start making money right away. So these trades are a little bit risky, but look at the return on them. $49 for $251 profit. Even if you don't get $251 profit, if you buy 10 of these. If you buy 10 of these on this table right here and do 20%, you're doing great. If you buy 10 of these and do 50% the next day, that is great. You can use very small amount of your account to make very, very large returns. And that's why I like debit spreads. All right, guys, I am done. Thanks for joining me in this chat. You know what? I'll do plenty more videos in the future. Look up for the credit spreads. I'll talk about credit spreads and also get into iron condors and some other things to trade. And I will be opening up a challenge account so I can kind of show you how to do these with other accounts what accounts I'm set up and Tasty Works. And y'all have a good one. Momentum.